The goal with these is to share a little bit of research that Greenwald's been up to, and answer any questions about it. Happy to answer questions related to this or not related to this. Commentary, welcome as well, observations. I want to thank Response AI, who we partnered with to conduct this study. They are an automated data collection and reporting platform that allows us to turn out research fast to meet today's demands. Also want to thank our sponsors on this as well. The full report is available for purchase. Should this whet your appetite enough that you're interested, just reach out to us. So I'll jump right into the next slide, Quincy, just a brief summary of what this was. So this was our millennial and life insurance study. It was conducted in mostly in December, but started at the very end of November. We had a total of 1,000 respondents. Millennials defined as age 24 to 39. Because we were asking how COVID had impacted their views of life insurance and the perceived need for insurance, we wanted to make sure that our respondents had what I'd consider an insurable interest, right? So they had to be married and or have children. And all of our respondents had household incomes of 50K or higher. And I am also joined today by the study's director, Greg Hershberger, our director of health and benefits, who is going to walk us through the first half of our short slide deck here about the impact of COVID on perceived need for insurance. And then I'm going to wrap it up with a few slides about what people reported they had by way of coverage, why, and a few other points. Greg, would you like to take it away?
Sounds good. Thank you, Lisa. So as Lisa said, we first wanted to look at the pandemic and understand how millennials have reacted to it. And since the start of the pandemic, a quarter have said that they've set aside emergency funds. A little bit over 1 in 10 say that they bought a life insurance policy for themselves. The same show that says they bought one for their child or for a spouse. And while many are setting aside funds, some have had to actually dip into savings that they otherwise wouldn't have by either pulling money from a retirement plan or stopping contributions to a plan altogether. We can go to the next slide. Yep. So looking forward to the next 12 months, 2/3 are planning to set aside emergency funds moving forward. And about 1 in 4 are planning to increase their retirement savings. So there are also not insignificant shares of folks who are planning to purchase a life insurance policy for themselves or for their child or for a spouse in the next year. In terms of millennials' top financial goals, half list saving for their child's college as a top goal, and about the same are listing emergency funds, saving for emergencies, and saving for retirement as top priorities. Insurance is a little bit further down the list, but not too far, with about 1/3 listing having enough insurance as a top priority moving forward. So shifting to life insurance in particular, we asked our respondents a series of agree-disagree statements. Strong majorities agree that every married couple and people who are like them need to have life insurance. 3/4 are also saying that it's important to have a life insurance policy beyond what is covered, what is provided by their employer. And thinking about coronavirus again, it's clearly had a strong impact on millennials. It's really making them kind of consider their own mortality, as half agree that the pandemic has increase the risk of premature death. And a little bit under half say that their family would be okay financially if they or their spouse were to die prematurely. We next asked a series of questions trying to gauge millennials' understanding of life insurance. And 2 and 3 say that they do understand how much life insurance is enough for their family, but few are sure of how much individual coverage is needed. Further kind of digging into their understanding, about half of millennials say that life insurance is complicated to buy, and a similar share say that they know enough to select the right type of plan. So comparing life insurance to other insurance products like auto or health, millennials generally have a lower understanding of life and disability. Fewer than 2/3 say they understand term or perm life well, and a little bit less say they understand disability insurance well. And then just really briefly touching on disability, fewer than half say that their family would be okay financially if they or their partner suffered an injury or a disability that impacted their ability to work. And COVID-19 has had an impact here as well, maybe a little bit smaller when it comes to a risk of disability versus a risk of death. But still only about half are saying that their family would be okay if they or their partner suffered an injury or a disability that impacted their ability to work. So now I'll turn it over to Lisa to talk about current coverage and purchase preferences.
Yeah, and I'll actually just pause, Quincy, if you don't mind going back to the last slide, just pause there for a second. I snuck these disability slides in there because while we set out to explore how the pandemic had impacted views of life insurance, the more we tried to interpret these results, the more it really occurred to me that a disability resulting from the pandemic would be likely as well, and generally is more likely than premature death. And yet it falls so much lower on the list of understanding and perception of need. And I don't know if others have opinions or viewpoints on that, or any observations or questions based on what Greg's shown us so far.
Hi, this is Ted Cates. I think that's interesting because, generally they're not a typical, someone you think about for a permanent cash value policy in this age group necessarily, in this type of a sale, that's focused on, cash value, perhaps at younger ages than saving for retirement, or let's say college savings, which would be the traditional, sales concept is something to think about. And with this big of a number, it does surprise me a little bit that it's as high. I guess it makes sense that it's this high, but typically it's just not something focused on at that age group. So it is. I think it's interesting from that perspective.
Thanks. All right. Well, one other observation I'll note is, particularly as it relates to millennials understanding some of the numbers Greg was just showing us, I think it's high. I think it's really high. I think there's probably some overclaiming of knowledge, and there were other indications of that throughout this research. And it's going to be on this next slide, Quincy, which is the reporting of coverage that they actually have. So we had just over 8 in 10 reporting they have some sort of life policy. Which did strike me as high for this age group, but it is, of course, dominated by workplace coverage. 63% saying they have workplace coverage, but nearly half of millennials saying they have an individual policy as well. And so we asked those on the next slide who didn't have an individual policy Why not? And I feel like I've seen this number many times before. I don't know that we've moved the needle in the decades that I've been looking at this finding, but they didn't buy individual coverage, or they're not interested in individual coverage because they think the employer coverage is going to be enough to meet their needs. They also think it's going to be too expensive, but given that they're young, it may not be that expensive. We saw indications that they really didn't understand cost at all. Some say they just haven't gotten around to it. And then just 1 in 10 don't think they need it at all, right? So everything Greg was showing us, the perceived need is really quite strong. These are the major obstacles to individual coverage. We also asked about triggers on the next slide. So for those who purchased an individual policy, what was the trigger? And among those who didn't purchase an individual policy, what do you think would be the trigger, right? And these have stayed pretty tried and true in all the years that I've been looking at data like this: the birth of a child, getting married. But then 32% say the pandemic made me think about it. That's definitely a new one. And certainly having any experience being the beneficiary of a policy can trigger someone to want to purchase. The one that really struck me in that green didn't purchase and what would cause them to is the 35% who say they would buy a life insurance policy if they developed a health issue. So I hope you're chuckling, because that's the wrong time to buy a life insurance policy, right? And it tells me there's a knowledge gap, even though they're claiming a pretty high level of understanding of life insurance and the need for it. On the next slide, we asked a little bit about how they'd buy. And with millennials, we've been talking about, oh, they're gonna do it all online, right? That's this millennial generation, leading edge with online purchases. But it's not their preference. The sources they would be most likely to use to make a life insurance purchase is a person. It is a financial advisor, is a life agent with one specific company, is a life agent who represents multiple companies. Purely online is still 60%. It is not a small number by any means, but it is still not the preferred method, is how I interpret this, nor is an 800 number or a call center with just half saying that would be something they'd be likely to use. So that's it. That's our coffee break. Questions and comments on any of this? I see something in chat that I'm going to read a little more carefully now.
Yeah, I love that note in the chat, Steve, that millennials are who have been getting a will. One of the drivers is designating a guardian for their pets.
Yeah.
Yeah,
That's about the most millennial thing I've ever heard.
that was the pandemic. I think 17% of them mentioned the pandemic, and the other was charitable giving too. So it was kind of nice to see that. So it's pets, charitable giving, and pandemic.
Question about, yes, I don't remember the exact number off the top of my head, Ted, but at that 50K household income and above, it was largely college graduates. And, so Greg, what was the most interesting finding to you from all of this?
Yeah, I mean, I think, just thinking about Steve's comment too, I think it's the increased kind of awareness of their own mortality among millennials. I mean, I'm a millennial. I wouldn't have qualified for this study because I don't have an insurable interest. But even me, myself, I know in the past year or so, I've been, more conservative, more thoughtful toward the future than I ever have been in my life. And I think, this is a generation defining event that can really shift the way you look about, you look at a lot of things, and including money and planning for the future. What about you?
I don't know that I'd say it was surprising, though it really did get me thinking, is that consistent thinking that the workplace policy is enough, right? And if you think about what goes on at the workplace, we're really not walking employees receiving a group or a voluntary product, maybe better on voluntary, through a true needs assessment, right? So they have it, so they assume that's enough. But the workplace is not where a real life insurance needs assessment is happening. And I feel like if millennials, or any consumer for that matter, was walked through a proper needs assessment, they'd realize by and large that their workplace policies are not enough. I also think we saw in other aspects of this study a really high desire for permanent life. And I don't think the workplace policies are going to satisfy that demand.
I had a thought.
Go ahead, Matt.
I had a thought about a couple of thoughts. I thought that the fact that a health event led some people, a third, to consider coverage is interesting. I hadn't thought about that before, but it might give an opportunity to disability companies, workers' comp companies, and health insurance companies to reach out to people who had an event that might still leave them insurable. And I think it often does, even if they're substandard. So that might be an interesting time to reach out to people after something happens to them that newly makes them interesting. So if you have a comment about that, and also it makes me think about the continued need to help people assess how much coverage they really need, which is not that easy. Translate a need for regular income and translate that into a lump sum amount.
So there's a question from Jeremy in the chat about additional sentiment on online purchasing. So yes, this study did explore it in certainly more detail than my one slide. But I think what we saw here, what we see in other studies, is even the millennial generation, they have a lot of comfort online. There's a lot of comfort in the research process and the learning process online. But we still consistently see that, at least in research, when it's offered to them as a viable option, they prefer a real person.
There's another question in the chat. I don't know. I don't think we answered it, but yeah. Any insights from this research or others you've done about how to close the knowledge gap on adequate coverage, depending on a household's needs?
Start with your workplace policy probably isn't enough. Would probably be the main thing I gleaned from this, and I mean it. I think that's a conversation starter that's probably going to get some people's attention, and then start explaining why it's not enough, and all the things that, if you are married and or have children, that need to be taken into account. And I think more broadly incorporating it into conversations about the real risk of disability, the real risk of premature death for someone in this age group. Feels like now millennials are primed to hear that and maybe not be as dismissive as they have been in the past.
And then there's also the question of how to deliver that message. And I think we've seen in this research and some others that there is interest in things like online calculators and tools to help you with that. But at the same time, like Lisa was saying earlier, there's also interest in kind of that face-to-face or at least on the phone talk with an advisor. So it seems like a kind of a balance.
Ted, another good question. We didn't dive into service very much for enforced policies. One or two questions, but what they would suggest is once policies are purchased, the appetite and willingness to check things, do things online, general service through online methods is much higher. It's just in that purchase process, they really want to talk to someone. Got another one in the chat. Purchase of home. Yeah, 15% is kind of low. We asked some other questions about beyond what we showed you in the triggers, sort of reasons for buying a policy. And it would not probably surprise anyone that one of the top reasons was so that my debts can get paid off if something happens. And the home was higher in that question wording and in that line of questioning. But really, we saw this group highly focused on their children. It was all about the children. And also evidence that they don't know what it means to buy a policy for their kids or to cover their kids, that there may be some mix-up and misunderstanding around beneficiary versus covered life.
Yeah, and I don't think we asked this question whether they're currently a homeowner or not, but again, these folks do have, they're either married or have children, and the vast majority of the people that we interviewed had children, so they may be at a stage where they're already homeowners. It's kind of crazy thinking about that. The millennial cohort keeps going from, the very young people to now stretching up to almost 40.
Not almost 40, we're 40. Yeah, we still, I'm not a big fan of the Gen Z terminology, but we are looking at a new generation now. The youngest people that we used to call millennials are aging, right? So the millennials are approaching and into midlife.
Matt Greenwald again, if I could just offer one more comment. By the way, I see a number of old friends on this call, so I want to say hello to all of them. What this suggests is bad things lead to thinking about life insurance, COVID, health issue. A loan from or a withdrawal from a retirement plan also is a suggestion of bad things. It makes me think, and if you have any observations on this, that maybe that's a signal for other education or information to get, because a loan is sometimes withdrawal, an underlying symptom of a deeper distress. So anyway, so just in terms of a financial wellness thing, to think about how we interpret people taking money out of their retirement plan.
Any other thoughts or questions? Well, thank you all for joining us. Hope you got to finish your coffee and have a good rest of your Friday and a good long weekend. And if you have any other questions about this study, please do not hesitate to reach out.